I have now passed a 50K account and a 150K account through topstep, and in this video I'm going to show you the strategy that I used to get me there. Before we jump into that, I just want to say how thankful and appreciative I am of how my last video went to heights that I couldn't even imagine. The amount of views, likes, comments, and the amount of subscribers that I got off of that video was absolutely tremendous. And I cannot thank you enough for all of the support. And I hope that I can continue to bring you videos like that one, because I know that there are people out there that need something like that. So without further ado, in this video, I'm going to show you the strategy that I used in order to pass my first 50K account ever, why I lost that account, and now that I passed a 150K account using the same strategy, but sticking to it this time. So let's jump into the charts and I'll show you guys how it works.
All right, hey everyone, welcome back to the channel. Today we are talking about strategy. Now, before I get into my strategy, I just want to put out there that this is a strategy that works for me. I'm not expecting anyone to copy my strategy. I'm not expecting it to work for everyone. It may work for some of you. This is what works for me. One of the things that I think most people don't understand getting into trading is that trading is a very personal thing. Okay. You have to find your own way. A lot of discouragement comes from trying to follow all of the guru, strategies or their call outs or whatever. And some people are successful with that. Most probably aren't. And then if you are successful with it, when you try to go off on your own, it isn't sustainable. You have to find the strategy or make a strategy that works for you, for your personality, for your type. Trading is extremely personal, okay? And you have to do a lot of soul searching and a lot of trial and error to come to something that finally works for you. And that is where I am finally at in my journey of trading. I found something that gives me the edge, and it's based on me and some things that I've taken from uh, a few different traders and have made it my own. Okay. So this is not something that I just created out of thin air. This is trial and error of a few different types of strategies and something that I've created and molded into my own strategy that works for me. And it works most of the time. Okay. Even if it's 60% of the time, it works. And I have now gotten past my 150K challenge. And if I stick to this strategy, one of the things that I've learned, and we'll talk about why I lost my 50K account. Um, if I stick to this strategy, it works. And I'll show you guys my accounts and stuff like that in this video so that you can see the progression. Okay, so let's jump into it. This is today's chart. Okay, today is June 5th, Thursday, June 5th, 2025. This is what we are seeing in NQ for today. I did not take any trades today. Price was kind of all over the place, never really gave us a real uh, direction until later in the day. And then we were past my key levels. And when I trade outside of my key levels is when I lose. But what you can see on the charts right now, okay, are my key levels. I have 5 of them that I place every day. And I'll show you how I do that later in the video. But for right now, you can see that I have these key levels here. I have a volume low. This is just what I label them for me. I have a control, which is fair value. Okay, it's not fair value gap. This is fair value based on price action of the previous day, and I'll show you how I get that. And then you have your volume high. In between the volume low and the volume high is where the majority of the trades were taken in the previous New York session. Okay, that's how I get these levels here, and you can see how price is attracted and reacts off of these lines almost all of the time. There are a few days where we are way off, either above or below these lines here, and in my research, I've found that when I try to trade when price is way outside of these key levels is when I lose a ton of money. Okay, so these key levels, they work, and price is attracted to them most often. Now, this is the Nasdaq. This is NQ futures. I don't trade anything else but NQ. So again, this is the strategy that works for me for NQ. Okay, you can try to implement this in other things. I don't know if it's going to work. I don't know if this is going to work for you, but I've had a lot of people ask me how I get my levels. So here we go. All right. So I put these three key levels in first, and then I always add the high of the day and the low of the day based on the levels previous to New York session open. Okay, so whatever the high is and the low is for that day before New York session, before 9:30 a.m. Eastern time, is how I mark these levels. Okay, so we had some news come out today at 8:30 that gave us this wick here, which was our low before New York session. And then later on, I don't know if something clicked or whatever in the market, we had this huge push here as well, which gave us this high wick here that gives me high of the day. That's easy there. Okay. You open up your chart, 15-minute chart is how I do it. Come here. I look at the high and the low of the day before New York session is open. Okay. And I put those two levels there. Boom. Now let's talk about my volume high, my control, and my volume low. These are set based on the previous New York session. Okay. So today's Thursday. I go into Wednesday. I go into the minute chart. Okay, and I set these levels here. So let me let me get rid of these levels here real quick, and I'll show you how I set this. Okay, so this is what the chart looks like when I open up my charts in the morning and I do my prep. Okay, so a 15-minute chart first. I set my highs and lows of the current day. Then I go into a minute chart and I scroll back into the previous day. Here's your line, here's previous day. And I zoom out so that I can see from 9:30 a.m. Eastern time to 4. That's New York session. I trade New York session, so I use the previous New York session because that's where your liquidity and whatnot matches. Okay. From here, what I do, go into indicators. I do volume profile fixed range. Okay, not the visible range. I do fixed range. I click on that. I go from 9:30 and I draw to 4 p.m. Boom. That gives me our fixed range here. Okay. Now, very simple. This is very simple. I take the top of the shaded area. Okay. This is where the majority of the trades yesterday's New York session were taken. I place a line right on the top that's labeled volume high. I take our control line here. This line here is called fair value. That's where most of the trades for the day, the majority of the trades, okay, within the range, this is where the majority of the trades were taken. That is the fair value. That is where the market felt that that price was equal between buyers and sellers for the previous session. Okay. I pop a line here. Okay. On the control, boom. I label that control. And then I draw another one right at the bottom. And that is my volume low. Okay, that's it. And then I scroll back over into today. And you can see, if I zoom out here, you can see from open, you can see how price respects these lines really, really well. Price bounced off of the volume low. This is all previous New York session. So you could use these even in the Asian and European session. Price moved up to the control. Once we broke control, moved up and broke past our volume high, came back. Look at where price is. Price spends a lot of time in between these lines here. Okay. And now we come in, and here's New York session open right here. We were above our volume high. We tested it a few times. Price moved below. And you can see that once we do that, price moves almost directly to these lines. And then if we consolidate, you can see where we're consolidating um, between my volume low here and low of the day. You can see how price is just attracted to these levels. And because these levels are just based off of what the previous day was trading, that's all it is. So this is price action and volume based. That's where the majority of the trades were taken on the previous day. So it's no different in setting previous day highs and previous day lows, except this hones in a little bit better on that because you're using a range where 70 or 80% of the trades were taken on the previous session. Okay. So if you're doing this on Monday, you're going to use Friday's New York session. Okay. And you can see where you can now use liquidity, which is what I see, right? When I see price coming to particular places and leaving large wicks like this is liquidity down here. We had consolidation here, we had a test here, we came through, retested our volume high, got rejected here, left two really large wicks right at volume low or the day low and at volume low, right? So you can see this huge rejection here off of our day low, basically at our volume low. And then the very next candle, very, very bullish push off of our volume low. This would have been a really, really nice entry here. Okay. And look where price went. So you stay out of all of this junk, right? You could have caught something here, maybe. But these price action, these two candles here, this is the price action that I'm looking for based off of my key levels. And you could have entered on the close of this candle, very bullish, completely overtakes the previous three candles, right? And price runs. Right. And we have our levels are set to where you even know where the retracement's going to go. So we had a nice bullish push right up to volume high. We had a retrace right to our control. I mean, these is like spot on. I did not move. You just saw me place these lines based on previous day, right? I did not set this based on today. That's why I did that. As you saw me place these lines. Then we move forward, and you can see how price is attracted to these price points, to these key levels, almost every single day. It's not 100%, but it is pretty good most of the time. And then you base your entries off of these key levels, liquidity and price action. That's how I trade. I don't use any other indicators. I do have the volume profile. This one is the visible range, basically shows you where the majority of the trades are being taken for what is showing on your screen. So if you change what you see here, the volume profile will change also. Okay. I don't use that uh, as an indicator, essentially. I use it just so that I can see where price may want to go. Right. So you can see here that during this time frame, you can see how we were at the low end of the trading range, right? And so you can see how if we get this strong push out of the low end of the range here, price may want to move to the upper end, especially with this large node here. All right. And these nodes that are pushed out, these are our volume, right? This is where trades are being done. Buyers and sellers are fighting, and price typically wants to go from node to node, right? Depending on whatever direction it's going to. But this I barely use this because it's a current indicator, and I don't think indicators that are current are actually current. They're lagging, right? So I use the key levels, price action, and liquidity based off of previous day that gives me my key levels here. This is the strategy. It's very simple. I just watch and I wait for price to get to a key level. I wait. If I am not at a key level, I don't trade. A lot of times these key levels are more spread apart. And if you're trying to trade in between the key levels, for me, most of the time when I do that, I always lose. But if I wait for price to get to key levels and show me something like this is price action that is telling you that we are bouncing, right? That there is liquidity right here that was grabbed in order to make a move. Okay. We had a strong push here. We had a retracement. Okay. This is liquidity grab. It's very simple, right? Off of our key levels at the bottom. Liquidity, liquidity, liquidity. We pushed. We didn't have enough to continue here. So we retraced back into our liquidity pool here and then very strong push out of it. That's what you're looking for. That's price action that you're looking for to confirm that we dipped into liquidity that you know is here. We have key levels here. These are prices that you know um, the market is attracted to. Okay, and this is how you set your entries and your exits, right? So for me, knowing that we have already reached the volume high here, if I had taken a trade, would have been at the close of this candle here. Okay, because very bullish close. We would have been in drawdown for what half a second here, a couple seconds here, half a minute maybe, and a very strong push back up. I know that we were probably going to retrace to this level here, which we did. And then look at this strong push past. Right. Now, knowing that my key levels were all hit and we look very bullish now, where am I looking to take profits? Previous highs, high of the day, right? And if we waited for all of that to play out, this would have been a really, really beautiful trade. I didn't take this just because I didn't like the price action that we were getting beforehand. And again, I'm still working on having that 100% conviction in my trades. And at this point, I'd rather stay out of the market than take something that I'm not really sure is going to work. And that's a fault on me. Okay. And I know that I'm working on it. But this would have been a beautiful entry here based off of my key levels. Really nice push right to the top. And now we are just sitting on top of today's high. We made new highs, but now we're consolidating on top of today's highs. And quite honestly, we probably consolidate here a little bit longer and we might continue to push up based on the bullishness prior to. I didn't take trades today. And once we get to about 11:30, that's when I start to wind down. Also, volume starts to decrease. You can see the tremendous decrease in volume here. So I don't really trade past 11:30, 12 o'clock. Um, but that's just my strategy. Those are my rules. I don't trade the first 15 minutes of market open, and I try to end my day between 11:30 and 12 o'clock if I haven't already taken anything. If I take something prior to and I'm in profit, I walk away for the day, keep my profits. But that's it. That's my strategy. It's extremely simple. It's based off of volume, price action, and liquidity. That's it. I don't use any other indicators. I don't use trail or moving averages or anything like that. And I know that those strategies work for some people. They've never worked for me. This I have found um, works for me. And my 150K account is now at 159,621, which puts me above the $9,000 profit target. So this account has passed. We're good to go. Um, I'm just need to pay my activation fee and whatever, and then I will have a 150K XFA through topstep. This strategy alone has gotten me here, and I'll show you guys on the screen here my performance stats. Okay, I'm not going to hide anything from you. You can see it here. My average win, average loss, I'm at a 4.53. Okay, keep my losses really, really tiny. Keep my wins big. My trade win percent, look at this. It's only 28%. It's not that big. Um, and was drawn down because when I first started this account, it was actually almost $2,500 into drawdown right off the rip because I was still working on getting out of that slump that I was in, which I talked about in the last video from losing my 50K account that I had. And the reason why I lost that account is because I strayed away from this strategy. I don't really know why. I don't know if I got cocky. I don't know if I just got too excited, but I started making trades that were not based on that strategy. And when I first started this 150K account, I did the same thing and it put me immediately into drawdown. So my win percent here was brought down a lot by that. I also move my stop loss to break even often, which often cuts me, just slightly below or whatever happens there based on slippage. So I end up losing more trades than I do win. But when my trade goes my way, my profits are significant. You can see my total P&L here. My profit factor is 1.77, pretty good. No trades today. But you guys can see, here's my stats. This is this week so far for me. I'll go back, and there you go. When I first started, immediately into drawdown, that was the first week. This is the week that I started. I started to slap myself out of it, get back into focusing on my strategy. Couple decent days brought me down a little bit of profit that week. This week, I really sat down and I said, look, I'm either going to do this or I'm not going to do it. And I really focused on um, the strategy and taking the trades that the market gave me, not looking for trades. And so I ended up going into this week here trying to be much more aggressive with jumping into trades when they present themselves at my key levels. And I did that. Um, and you can see here, this was a $8,900 profitable week. Okay. And then from there, everything turned around for me. So brought my account back up into the green this week here. And then you can see that I have had 1, 2, 3, 4, 5 straight green days so far. Today is a no trade day because I did not like the price action. And there was really only maybe one, I would say definitely one possibility that I could have taken. But again, I didn't like it. So I'd rather just stay out of the market. Tomorrow's another day. And here we are profiting this week so far. So that is my strategy in a nutshell. It's very, very simple and it works. Let me hop over to the 15-minute chart because I do leave all of these up so that I can go back and see if it is actually working. And you can see, without me drawing lines, the darker part of these profiles here. When you cross over, you can see where price is trading within those zones here, right? So here's from here to here. This is where price was until we broke out. Here's your level previous there. You can see where price came down to that, bounced around a little bit, came back up, and then we broke through. But the 930, here's 930, here's market open, is within that range. There are some days, like I said before, where you are way outside of the range. Let me see if I can find. This day was one until market open crashed into the range. So this was a day where you really had to wait for price to get to your key levels, or I wasn't going to trade. That's what I'm learning. That's what part of my problem was. Is there were a few days in a row where where we had large fluctuations overnight in price that took price outside of my trading range, and I tried to make trades up, trades that weren't based off of levels or volume or anything like that, which works for me. And almost every single time the trade failed on me. So what I'm figuring out now is if I just wait for price to get to these key levels, okay, and I trade based off of those key levels, I am more likely to have a really, really good trade than I am if I trade outside my key levels. If price fluctuates overnight off of news or something like that, ends up way outside of my range, I need to wait for price to either come back into that range or wait for the next day. And if I do that, my account grows. So that's it. That's my simple strategy that works again for me. This isn't for everyone, but it's really, really easy. Every day I come on here and I do my prep and then I look and wait for opportunities. I make a plan. If price gets to here, we'll see how it acts. We'll watch the price action. We'll watch the liquidity, how the liquidity is formed, and then we base off of our entries and exits on our key levels. It works. It works for me. It works for NQ right now, anyway. What I like about this strategy is it's based off of the volume and price action. It's not based off of indicators. It's not based off of something that's so particular that there's so many rules to it. This leaves some trader discretion, okay? But you know that these price levels are levels that price is attracted to because that's where it was the day before, okay? And most of the time, those levels want to be hit before they make different levels. And that's what we're trading on. We're trading on what the market is telling us, not what we want the market to do. And I found that this strategy works really, really well. So I hope that this answers a lot of your questions. I hope you guys understand where I get my key levels from. Those of you that are in the Discord, I sometimes throw out the key levels that I'm looking at. And I find that they are hit most of the time. And I think that's why a lot of you were asking how I get my key levels. This is how I do it. That's it. That's it, guys. I hope you guys, I hope this was easy for you to understand. I hope this might be something that might help you kind of reach the next level. This, again, was something that I've put together from a couple different traders out there that have shown some success. I don't do it exactly the way they do it. I've mixed and matched some key elements that I've put together to make my own strategy that really, really works for me as long as I am focused and paying attention and patient and waiting for price to get to these levels. It works a lot of the time. And I was able to bring this 150K account from, you guys saw it, a negative 2,500 or whatever it was, up into the 9,621 mark just within 2 weeks. All right. And so for me, that's pretty good. I know some people are out there, oh, I passed this account in 2 days or whatever. Great. That's really awesome for you. I am just now finding some consistency. So for me, 2 weeks, 150K account, I'm happy with that. I hope you guys could be too. I hope this video helps you guys a little bit. And again, thank you guys for all the support. I appreciate every single one of you. That last video that I posted must have hit a nerve. Definitely spoke to a lot of you, whether you're in the same place, have been in the same place. I get it, and that's why I posted that video. So it really made me feel appreciated, and I hope that you guys all know that you're appreciated as well. And you're not the only one. There's a lot of us out here struggling with the same things. So again, my whole point of doing this YouTube channel was to start from nothing, show you guys the process, all of the losses, help you guys understand that you're not alone, that there are others out there going through the same exact thing. Instead of just bringing you the, hey, I'm a successful guru, follow what I do. No, I wanted something out, something real and something that other people can connect with so that we can connect, and then we can help each other move to the next level, because trading can be extremely lonely sitting here at your desk all by yourself waiting for that opportunity to pop up. So I've created this YouTube channel to reach out to others. I've created a Discord community so that we can connect. So if you guys are interested in that, link will be in the description down below. Join the Discord. We have a nice small little community that's starting. We talk to each other every morning during market open. We toss ideas off of each other. And it's really great to be able to reach out and have discussions with other people at the same level. Some are a little bit better off than others. Some are, a little less better off. But together, we are working towards becoming successful and creating a community built around that. So, thank you guys. I hope this helps you guys. Don't forget to subscribe to the channel, like, comment, share, do all those things, turn on notifications so that you guys get notified every time I post a video. We'll see you guys in the next one. Stay green.